Welcome to Atlanta's Commercial Real Estate Show, brought to you by Bull Realty, the show for property owners and business leaders. Host Michael Bull brings you market analysis, advice, and opportunities around Atlanta.
Welcome. Commercial real estate in Atlanta. What a hot market we've had around Atlanta. And today we're going to talk about the office market. If you lease office space in Atlanta and you've been in the market lately, you've seen some huge rent increases that you haven't seen in the past if you've been in Atlanta a long time. Well, let's see what's going to happen moving forward in the future with the office market around Atlanta. Please welcome my guest, Hans Nordby. He's with CoStar. He's Managing Director of CoStar Portfolio Strategies, and he's joining us on the phone. Hans, thanks for being with us.
Michael, thank you for having us today.
So, Hans, what do you see in the Atlanta office market as far as rate trends? What are tenants having to pay today, and how's it been trending?
Well, I tell you what, as you alluded to in your lead in there, Michael, the Atlanta market is hot, and that's not just a function of being summer in Atlanta. Office rents are growing well ahead of the U.S. average at a rate of 4.7% as of the end of the second quarter, and that's compared to a U.S. rate of 1.7%. So it's about almost triple.
Wow.
That is booming rent growth for Atlanta. Now, for context, the average annual rent growth was 2.9% from 05 to 07, when the market was last at this point in the cycle, 10 years ago. In terms of availability, vacancy rates in Atlanta's office market are 12.1% today, and the market hasn't been this tight since 2001. So absolutely, the market is very good. The driving force behind the tight market in Atlanta is that office developers have been hesitant to jump back into the market after the overbuilding that occurred from 2006 to 2007. This is partly because developers with prime parcels have often been more inclined to build apartment projects. And office rent growth really hasn't kept pace with construction costs. In fact, after the recession, office rents didn't climb back up to their 2008 levels until the second half of 2015, 2 years ago. Up until that point, developers breaking ground on office projects were pretty rare in Atlanta. But we've seen developers begin to step back into the market early 2016, last year, with a jump in the total square foot of office projects under construction more than doubling from 1.6 million square foot in 2015 to more than 5.2 million square feet today. So yes, Atlanta's in a great place, but it's going to slow down a bit from here because there is new supply coming to the market.
So what would you expect for landlords and tenants to be experiencing moving forward on rates if we're starting to tick up on new supply, but also our outlook for jobs in Atlanta is very strong. So what would be your forecast?
Well, you're exactly right in terms of a strong outlook for Atlanta. Atlanta, Dallas, Minneapolis, these are large tenant metros that tend to do well in the last half to one-third of an economic cycle when they pick up more tenant relocations, and when housing prices get to be too high in other parts of the country, and mom and dad want a place where they can buy a house and the schools aren't too bad. So that benefits these metros tremendously. And tell you what, housing prices are at an all-time high. They've exceeded the 2007 levels. Federal government is throwing gas on the fire with these low down payment mortgages, which, as an editorial comment, I would say is a stupid idea. But net, it's great for Atlanta. The flip side is that why do people move to Atlanta? Well, a lot of reasons, but one of which is that the real estate is affordable because you can build real estate, and that's what the market will do. Our expectations for supply in the Atlanta office market is that net completions on a 12-month rolling basis at about 2.7 million square feet in the most recent quarter will notch up to 4.2 million square feet by the time we get to the beginning of 2018. Then it'll recede, so we already see a slight cutback in the number of new projects breaking ground in Atlanta. That could change depending on big tenant activity, anchor tenants that drive new buildings, and overall vacancy rates. But net construction is fairly high, so underway is still over 5 million feet. So we would anticipate that from the high 4% range today, you would fall below 3% in rent growth by the middle of 2018. Still not bad compared to the rest of the country, but it is slower.
Yeah. So 3% in 18. I guess it's a little hard to look out further than that.
Well, we do a 5-year forecast, and we would say that rent growth should fall just under 2 by the beginning of 2019. And for some clarity on that, that would rely on a continued, fairly strong pipeline of new projects breaking ground. Because when tenants see that there are leasing options in the market, it keeps landlords and tenants thinking that rents shouldn't grow too much. So it's not just the supply hitting the market this quarter, it's what's in the pipeline that informs rents. So, yeah, to your point, the crystal ball gets a little murkier 2 years out. It depends on how many people break ground, which depends on things like interest rates. But we would say that this level of rent growth is just uncharacteristic for Atlanta, and that investors love commercial real estate, and Atlanta will continue to get new buildings to fit them. So that would be our forecast, Michael.
Yeah. Well, it's interesting. It makes me wonder if these strong rate growths in office market could continue on a little longer in Atlanta, because you mentioned construction costs are high, land costs are high here for the locations where people want their businesses, like the Midtown market, right? The perimeter market, the Buckhead market. Those areas are hard to get into and find sites to build today.
Well, that's a good point. And here's an interesting twist on this, Michael. It's a little theoretical at this point, but I think it would stand to reason to your listeners who are active people on the ground and investors in the market. If interest rates were to go up, say they go up by 200 basis points, 2%, sure, that is going to hit cap rates at some point. Not one for one, but that's going to press cap rates up a little bit. What it will also do is push up interest rates on new construction financing, and it will make people think twice about taking out a floating rate loan to build a building. Mm-hmm. So one of the risks to the forecast is higher interest rates, and nobody knows how interest rates are going to move. But if they do, that could make your case, Michael, for higher rents, because you'd get less construction than expected.
Yeah, and that's a good point. And maybe you're building it as a merchant builder, and you're thinking about flipping out of that with your exit strategy. Well, if rates go up 2% higher, well, you're certainly going to have a much higher cap rate. And in a great world, maybe 1% higher would be my estimate. But that is interesting. So, any final tip for Atlanta office users or office investors or owners?
Well, I think first of all, we like Atlanta right now. Atlanta is undersupplied relative to history and relative to demand. So as an investment market, we're pretty bullish on Atlanta, given that big assumption for no recession. And the flip side is, if we have a recession, then my money would be on about 2.5 to 3 years out, although nobody knows. I would want to be extending lease terms and going for as much credit as I can today. Also, rent growth is strong today. It's a good environment in which to make a deal as a landlord. But for a tenant basis, maybe you'd want to go a little shorter. If you don't like today's rents, maybe you want to do a 3-year deal, figuring in 3 years, if the economy is good, you're going to be in a position to pay the rent. And if the economy is bad, you're going to get a better rent. So I think it depends on which chair you're sitting in, Michael.
Yeah, and your outlook, especially if you look at the thought of rising interest rates and that continue to slow down supply. It's a little bit of a crapshoot. Well, Hans, thanks for joining us today. We appreciate you being on the show.
Thank you for having me. And
this segment is brought to you by Barnes Creative Studios. If you want some incredible video of your next commercial project, visit barnescreativestudios.com. Well, stay with us. We'll have more on the Atlanta market. Check out the links below. Thanks for being with us.